Good morning. It's Trisha with Easy E-mini Trade, and I just want to go over a little bit more on how you can make use of that 40-point gap that the double stochastics provide us. Um, anyway, I'm just going to get right to it. If you have any questions, always feel free to shoot me an email. Okay, so let's get to it. Okay, so I've got ES up here. This is this morning. I know it's pre-market, but the information will be relevant no matter when or what you're trading. So yes, I have on a 4 range. If the market's moving very fast and you're using a range chart, just up the range size. So if it's really fast market during regular trading hours, change it to a 5 range, a 6 range, a 7 range, just keeping in mind that the bigger the range size that you're using, the bigger the stop is likely to be. But I'm using Gordon's indicators because it does the work for me. So it'll tell me, it'll mark on these double stochastics when I'm getting that 40-point gap between them. And these are the two stochastics that we always use for the 1-minute trade setup and the slinky setup. So they're two stochastics overlaid into the same panel. If you were using just two standard stochastics overlaid, that's fine, totally up to you. I like to be a little lazy and this helps. But you can see when we get this 40-point gap between the two stochastics, generally what is going to happen is that price is going to react. So here's where price is, here's where our 40-point gap is. So generally what's going to happen is price is going to react by either moving in the direction that our green stochastic line would have to move to find its way toward the red, or price will react by going sideways. So for example, if I was at support and I saw this 40-point gap, that would be an ideal opportunity very often to just buy support, as you can see here. This is ES coming down to yesterday's close as well as fair value area high. So I could go ahead and buy that bounce, anticipating that either it's going to bounce while the space fills or it's going to go sideways. Here's a good example of it going sideways to fill this space right here. And this is helpful if you're at a support resistance area. If you get the 40-point gap, it doesn't mean automatically buy it, for example, anticipating that price is going to move higher to fill this 40-point gap, right? It has to make sense. So if you're at support and you see it, great. If you're at resistance and you see it, then you can short it. So just one more way to make use of those stochastics. Here's one here. And you can see we get the 40-point gap, but we're not really going anywhere. So let's say that you tried to buy off this VWAP area. You can see it's going sideways while the space is filling. So if it's not going anywhere after the space fills, then you can just get out of the trade at break even. And the good thing about buying support or selling resistance is that your stop can be fairly tight majority of the time. You can use just above resistance if you're shorting off resistance, and you can use just under support if you're buying support. So you're going to see this repeatedly, but like I said, it has to make sense in an area that you're looking to take a trade. Also, where it's helpful is if you're looking to take a pullback. Let me find one here. Let me look back at yesterday. Okay, so here's one from yesterday. Maybe not ideal, but you can see price is moving lower here. And so let's say that you want to find a way in. You can wait for a pullback. So you can see price pulls back here, actually trades to that super trend stop in this moving average, and we get our 40-point gapper. So what this is telling me is that I could realistically take this pullback short because I've got this 40-point gap here, and likely price is either going to go sideways to fill that space or it's going to move lower to fill that space, right? Because the green line of the stochastic would move lower to find its way to the red. Now, one thing to keep in mind, if it's a very fast market, these spaces can fill up pretty quickly and the red line can find its way to the green, but that is not typically the norm. So just keep that in mind. Another thing that I want to point out is that if you're trading off the 1 minute and you get the 40-point gapper, because the 1 minute is going to move a lot slower than a range chart. So just keep in mind that when you get that 40-point gap to show up on a 1 minute chart, more than likely price will go sideways to fill that space, as you can see here. And I know this is pre-market, but that's typically what you're going to find. So if you're trading off a tick chart or a range chart, I would be more inclined to anticipate buying off support or resistance with those 40-point gappers. Like I said, if you're seeing it on a time-based chart, usually price is going to go sideways to fill that space. Okay, so I hope you find that helpful. If you are interested in Gordon's indicators, you can just go to my site, easy-trade.com, go here where it says Gordon's NinjaTrader 8 indicators, and go here where it says NinjaTrader 8 stochastics. And I'm using both of them. I'm using the Easy Stochastics indicator. That's going to mark all those 40-point gappers as well as some other items. And then this one, and it will also plot your 2 stochastics on your chart for you. This one here is helpful if you're trading the Slinky or the 1 minute chart. And this will mark longs and shorts, longs OB, shorts OS. But if you're going to put this on your chart, and this is the only indicator that you're not using this Easy Stochastics indicator, you will have to plot the 2 stochastics. And all the instructions are included in both those indicators. Okay, so I hope you have a great day, and I will chat with you all soon.